there's one more thing is like why should we lock in return now? Why don't we put the money in the stock market? With the U.S. Tech stocks, there are a lot of opportunity. The rally last year and then continue early this year. A lot of people are thinking, maybe it's time to take the money out, right? To invest in the relatively riskier asset, right? What's your view, Ajit?
Yeah, so I think first, obviously everyone should invest based on their own risk appetite and based on their time horizon. Now, I think as a general principle, that is very important. Now, the current backdrop, and as recent as yesterday, I think Fed signaled and there was a consensus that there's likely 3 rate cuts happening this year. So which means that it's coming.
Yes.
And for last 5 Fed meetings, as we know, no hike. The inflation trend is lower. So we are there. We're almost there, and it's going to happen soon. If you look at the projections, and on the screen, you can see that for September meeting, people are already projecting that the rates will go down to 4.5% in the US dollar. So having that backdrop where the interest rate cuts are about to happen, I think it is an important one to think, where especially again the yields are at decades high, whether, and that leads to the next question, whether it's the right time to lock in.
Yes.
So if we talk about equity markets globally, I think, and again it's like risk versus reward. If we talk about equity markets globally, like S&P, even yesterday hit an all-time high. So now, is that rally sustainable? I think it's obviously hard to predict, but given the valuations, given a lot of times, and history has told us that there's always a lag effect as the interest rates peak. The corporate revenues, the corporate balance sheet starts to have a impact as they roll their mortgages, as they roll their debt. The impact on the earnings, the impact on balance sheet starts to happen with a lag effect. So it is as where it is. It's we believe it's a riskier bet, and across the street as well, a lot of analysts believe the U.S. markets may not have as of a stellar year that they had last year. Now closer to home, Hong Kong, China, as we were discussing before, it has not been the best of last 5 years. Now has the market bottomed, or could the rally that we have seen in last 1 month continue? Again, hard to say, but given the structural challenges that we have, another tough one. But overall, with that Fed backdrop, equity markets conditions, obviously I think from a risk reward perspective, where the yields are, income or time deposits now start to play a very important role. And as if the Fed really starts to cut, now is the time to start locking in rates.
Yeah, absolutely. So and also I guess we also need to diversify our portfolio. We are not saying putting all the cash in time deposit, right? So we also offer different type of products, right? But it's definitely a good time to lock in the rate, right? Especially with the Fed meeting yesterday. And I think the next one about our product Cash Fixed, right? I think we already mentioned, right? A lot of our clients are asking, could you offer more tenors, right? Once we launch the 6 month, right? I want to be still flexible, but maybe, I know you have the flexi, but all my cash in Hong Kong dollar, right? So they may prefer our fix and they want to lock in the rate. So what are the tenors? Can we offer more? Right, more different types of different tenors for our client to select.
So I think so at the moment what's planned is 1 month, 3 months, 6 months, and this is trying to cover for your short-term cash needs. Obviously, I think we can offer, and we potentially may offer 12 month and beyond as well. Now I think again, the whole idea for us is how to solve for your cash management needs. I think depending on obviously your own cash needs, we have now a full suite. Like we have a Cash Plus Flexi, which is a completely flexible
T+1
US dollar super aggressive rates. It should be something where you need the money in the next month or so, or you need the money next week. So to solve for those, that money is compounded every day. So rather than keeping it idle, you have a solution where you can earn a lot more on your idle cash. And then, and again, the interest rate backdrop we just discussed. It's a good time where if you have cash where you don't need it for next 3 months, 6 months, good time to lock in the rates, where effectively the Cash Plus Fixed in Hong Kong dollar comes and makes it kind of very efficient, and you start to build a ladder of cash management solutions for your needs for next 1 week, 1 month, 3 months, 6 months.
Absolutely. So a lot of clients also ask, any offers? Give me some offers. We go to bank and there are a lot of different offers, right? So and then I was telling a lot of our clients that the 4.7 is over, right? The offer of giving you 4.7%, right, with no conditions, no mean, no gap. If we start to add a lot of offers, right, maybe we will have to reduce the rate, right? And does it make sense for you to also study a lot of those offer terms and here and there, right? But I guess we all love offers, right? So we could offer something, right? If you're interested, take a look at the link below. We'll offer the access to the information on like how to onboard the Syfe, right? More about the product. If there are some time limited offers along with some events that we're running on top of the rate here, that you also want to look for some offers to trigger that that moment for you to really become a Syfe client, right? Watch out for more news. We'll share it with more kind of the events that we are running and offers that we have.
And feel free to reach out to us if you have any further questions, any feedback on the product. We are happy to answer.
And we have a WhatsApp channel. We'll also add that into this link, and feel free to reach out. Just text us. Our advisory team would, I won't say 24/7, I can't say for them, but they would answer your queries in the shortest time possible. All right. Thank you everyone for interest in the product. Catch up soon.
All right. Thank you.